to the Voiceover Round Table. I'm Mike Tobin.
And I'm Emma O'Neill. Every week, we get together to talk about all things voiceover, with a special focus on community.
Bringing you in-depth interviews, roundtable discussions, special performance events, and industry-leading guests.
Let's get started. This is the Voiceover Round Table. I'm very excited about this, which is kind of weird that you're excited to talk about taxes and expenses and stuff like that. But when it finally starts making sense, it gets to be exciting.
Exciting times indeed.
Exciting times. It's
right?
An exciting time for the show. We're very happy that you're with us tonight. Why is there feedback on something? I'm not sure what's happening. Anyway, we're good. So last week we celebrated our 1-year anniversary on the Voiceover Roundtable and had
Huzzah!
It was so funny. Oh my God, the replay. If anyone of you have listened to it, get through the first 2 minutes of the complete chaos of just the mental, and then you'll actually get into the show. It's just very, very funny. So please do go and check the replay section on Clubhouse, and very soon the podcast version of the show.
Mm-hmm. Gradually trying to get those added, and there's something about how long before I can download off of Clubhouse. I wanted to put last week's show up today, and I could listen to it on Clubhouse, but I couldn't download it, which was weird. So it's coming soon. Yes, there's already a few shows up. If you enjoy podcasts, grab them wherever you grab your podcasts, Apple Podcasts, Spotify, Amazon Music, and where is the other place? Well, there's a few of them. Anyways.
That's very exciting.
Cool.
Very exciting. Our guest tonight grew up in a home filled with creativity, with mom writing or performing music and dad blaring the Beatles while she practiced for her 10 years of dance and performing in music. I feel like you stole my bio, so it's kind of weird. This love for the creative arts ignited her passion for working within the cultural industry. With over a decade of experience working alongside music industry accountant veterans DJ Gold and Michelle Gold, she's worked with both high-profile clients and others just trying to find their footing in their careers. She has expertise in music, film, TV, comedy clubs, nightclubs, all performing arts, and anyone in front of and behind the camera.
Her speaking engagements have included Coalition Music, that's Canada's leading music incubator, VO North Conference, U of T, the Monk School of Global Affairs, #Paid, Music Managers Forum, MMF, Song Studio, Folk Music Ontario, Kensington Market Jazz Festival, and so much more. She works hand in hand with her clients to ensure that together they're tackling their immediate needs, but also considering their future ambitions. Better yet, she equips them with the tools they need to understand how to run the accounting side of their business.
There is nothing that brings her greater fulfillment than to enable her clients to do what they love for a living so that she can take care of the accounting after the show. Please welcome to the Voiceover Roundtable, CPA Sondra Gold.
What an intro. Thank you so much.
That's you.
It's you. It's all you.
Welcome to you. How are you?
Thank you. I'm good. How are you? Thank you for having me.
Absolutely. I'm very excited that you're here.
Yeah, we're thrilled to have you. Thank you so much for making some time to be with us, because I imagine probably busy. You're probably quite busy.
It's what we call corporate tax season right now.
Is it? What?
Season everyone's very familiar with personal taxes, February to April. And this is when all the corporations come up.
Okay, I want to talk about time. That's kind of my first thing that I was going to say, timing, because we've got questions. And I know we're going to try and cover a lot of ground tonight. Here we are at time of broadcast and recording in early November. Now, most people, because I know what you just mentioned, okay, corporations and stuff like that, but most people, individuals, associate tax time usually with the spring, and probably because of deadlines and stuff. So my guess is that tonight you're going to help us kind of maybe reframe our mindsets about taxes. Should we be thinking about taxes right now in mid-November?
Absolutely. It's not to be overwhelming, but it should be something that is thought about throughout the year, especially if you are in a self-employed situation, so that there aren't surprises. And so that it's not overwhelming come January when you have a whole year of bookkeeping to do, or organizing to actually be able to figure out what your income was for the year or what your taxes are going to be.
Yeah, waving my bank statement said Sondra right now. I swear I'm getting them in.
I promise. But Ben, we've had these conversations too, right? I'm about having a handle on it throughout the year so that
100%.
it's less stressful, because it can be very stressful. So the more you have a handle on it, the more organized you are, the more you fight that procrastination to get things together, the easier tax time is. And people think about tax season as, you're right, as April 30th deadline, and it's true. And it really is this small period of time, because any slip, so if you're receiving any T4As, T4s, T5s, they're not due to the government until the end of February. And we actually cannot file tax returns with the government of Canada until some point in middle to end of February. So from about mid-March to the end of April, about 6 weeks, that's the craziest of tax season, because now everyone should have their slips, bookkeeping should be done, tax programs available and ready to file. So it really is. But there's lots of planning you can do ahead of time so that it's not a last-minute stressful event.
The one thing I'm glad that you mentioned, like Canadian law and different things like that, I wanted to mention to our guests in the audience listening that a lot of the content tonight will be sort of Canada-centric, but there is a lot of stuff that's going to cross over when it comes to talking about things like bookkeeping or talking about things like expenses and stuff like that. And then it's just a matter of you, if you, for example, if you're in the United States, of reframing it with your particular tax laws and, practices and things like that. So please don't bail on us. Stick around.
It's also good information for anyone physically coming into Canada and may be required to file a Canadian tax return. If you are in the U.S. listening and you are not physically coming into Canada to record something, that's not considered working in Canada. But if you physically come in and record and deliver something, for example, that might be considered working in Canada. And depending on the scenario, you may be required to file a Canadian tax return.
Mm-hmm.
I feel like we should get straight into it. But yes, I think that's really important that we do mention that. But again, driving home that there's going to be a lot of crossover. I've sat in on multiple webinars and information sessions for U.S. tax laws, and I have learned a ton just from a tax perspective. So of understanding what it is that I can do.
Right. Yeah, that makes sense.
Yep. So getting straight into it.
Okay.
The 3 ways to operate a business are.
So here in Canada, the 3 ways to operate a business are self-employed, partnership, or a corporation. And being an employee is not operating a business. It's working for someone else's business. So if you do have an employment position, that's not what I'm referring to. I'm referring to a position where you are invoicing, you are in charge of the clients. The control is 100% in your hands. So as a self-employed person, a sole proprietor, on your personal tax return, you will have a business statement, and that's where you're recording all of your income and expenses for your self-employed business or businesses. As a partnership, that would be, let's say, you plus somebody else. I don't know specifically an example in the voiceover world, but I'm sure something exists. But if you have a partnership, you are taking your share of the income and expenses and again, reporting it on your personal tax return. A corporation is the only one out of the 3 where you have a separate taxpayer. So a corporation is a separate legal entity. It files its own tax return. It can be sued. It can sue others. And its assets are separate than from your personal assets. So those are the 3 different ways to have a business. And there's, benefits to all 3 different ways.
Incorporated would be the same as an LLC-ish.
This is where I can show that I'm really a Canadian tax accountant and not a U.S. because in Canada, there's one form of a corporation. In the U.S., there's multiple forms, and some of them are corporations, but they act as partnerships, or the income still flows through the company and lands on your personal. So I'm not familiar with all the C Corp, the S Corp, LLC, all that stuff. But in Canada, you're incorporated. It's just one separate entity.
Got ya.
Right. Well, let's talk about it a little bit more. I would imagine that the majority of us, when I say us, voice actors, probably fall into the self-employed, sole proprietor, right? Am I correct in saying that? The majority of
I would think most of my voiceover clients are sole proprietors.
Okay.
Yeah.
You mentioned partnership, probably not a lot of instances.
Yeah.
I can imagine maybe like, maybe a husband and wife who both do voiceover might have a reason to be a partnership. Is that?
I don't know. I mean, you guys, you would both know better than I know, but when you're a voiceover artist, it's your voice.
Yeah.
So unless you were doing a project together, that wasn't just your talent of your voice. If you were producing a show together, or something like that, and you actually did have a partnership there, there's still definite possibility.
Yeah. Well, let's jump to that incorporation thing, because I think this is a question that we see a lot pop up in Facebook chats and forums and different things like that, and even at conferences we've heard it asked before. I'm sure you got the question plenty of times, like at VO North and things like that. Mm-hmm. When should a voice actor consider incorporating?
Yeah, it is definitely a popular question. I'm asked this question almost daily, and incorporating people regularly. But I will preface my answer with everybody's scenario is completely different, and there's a lot of different things that you need to consider. But to even raise the question, you should be in a position where you're making more money than you need to live on. So if you're self-employed business or businesses, if you're looking at your personal tax return and you're paying a lot of tax and you didn't need all this money at the end of the year, and you could have left it in the company, that would tell me that we could have benefit from being incorporated. So if you start to see money building in your personal bank account, there could be a benefit there. And that's because in Canada, a CCPC, a Canadian controlled private corporation, which is what any of the Canadians would own, pays a much lower rate of tax than we do as individuals. And it's actually the opposite in the US. In the US, the personal rates are lower than the corporations. Oh. But in Canada, the corporation has a lower rate. So in Ontario, it's about 12.5% that you would pay on the first $500,000 of profit in your CCPC. So income less your expenses, 12.5%. Whereas personally, once you pass about $220,000, you're paying 53.5% on the next dollar and up. So there's definitely a difference in the tax rates. So that, from a tax perspective, that would be the most popular reason to incorporate, to use that low tax rate. It is a temporary place to have your money because at some point it's going to come out, but you can control how fast you take it out, to smooth it over multiple years. If you don't need it, it can live in the corporation, and that's where you're building your wealth. Outside of the tax perspective, I will add, and I'm not a lawyer, but having that separate entity, depending on the scenario, does create that legal protection, again, not a lawyer, from you as an individual and your personal assets. So sometimes that's a reason why people would incorporate. But going back to the tax reason, it's this low tax rate in the corporation that's offered that is very enticing.
Very.
12.5%,
53%. But
I think we'll talk about it a little bit more later, because eventually some of that money has to come into your bank account in some way, shape.
Yeah.
Right. But we can.
Yeah, exactly. And also, other ways to minimize taxes personally would be, for example, contributing to an RSP. As long as you have the RSP contribution room, which is a dollar for dollar deduction on your personal tax return, that can mitigate some tax, and that might be enough. So instead of storing your excess funds in a corporation, you're keeping it in the RSP, which has its benefits as well, and it has its risks. But there's that to consider. Other things would be, if I had someone saying, I think it's time for me to incorporate, I'm making more money than I need to live on, but also in 2 years, I'm going to buy a house. Like, we may want to consider waiting 2 years or some other options, because if the lender, like the bank, wants to see a strong personal tax return to have a mortgage, incorporating is not going to do that for you, because the idea with incorporating is to lower your personal income as much as possible.
Yeah. I see.
Which is why you want to also be doing your taxes throughout the year, because you can only contribute into the RSP until the end of January, isn't it?
End of February. Yeah.
So
yeah, that's a great point. It's another reason to take a look at what your estimate is going to be, so you can do that. And I'm often in February doing those quick calculations saying, okay, if you contribute 5,000, this is what it's going to look like. If you contribute 10,000, this is what it's going to look like. Yeah.
Mm-hmm.
Yeah, it can make a big difference. And another thing that we have to look at is the tax system, GST and HST.
Yes.
When to register, what does it mean, all of the things.
Yeah, and also another very popular question, and also I think one of the mistakes that people make is not registering. So GST, HST is Canada's sales tax system. There's also PST, if anyone's listing from a PST province, but that's a separate filing. So whether you are self-employed, a partnership, or a corporation, you can be registered for HST, GST, HST. Once your sales in a 4-quarter rolling basis hit 30,000 gross of your income, you have to register for HST. So if you looked at a whole year, if you looked at all of 2022 and there was no, you hadn't hit 30,000 yet, but then you add January, February, March 2023, you drop January, February, March of 2022, and you hit 30,000, you need to register for HST. You can register beforehand. You can voluntarily register, which we're often doing. But once you hit the 30,000, you have to. And that 30,000 threshold includes all of your self-employed income. So if you're a voiceover artist and you're also a photographer, those are 2 self-employed statements. You combine them to look at that 30,000 threshold. And the way that HST works is that once you're registered, you're going to collect the appropriate GST, HST on top of your fee. So if you're doing a job for someone outside of Canada, and if you were to snail mail them an invoice, it went to the US, there's no HST. If you snail mail them an invoice and it goes to BC, it's 5%. Ontario, 13%. So you make sure you're collecting the correct amount. And HST is trust money. You're collecting that on top of your fee, so your fee does not change, on behalf of the government. So I often recommend open up a second bank account, push it aside. This is not your money.
Yeah.
Okay? And amongst your expenses, whether you're registered or not, you're going to spend HST and GST in Canada. And so if you are registered, you get to deduct that from what you've collected and only give the government the difference. So if you collected $100 in HST and you spend $20 in HST, you only send the government the $80 and you get to keep that $20 back and repay yourself for the HST that you're out of pocket.
Right.
It's a bigger conversation than that because it depends on a few other things. But most of the time I recommend registering for HST because you're in a better financial position. Your income does not change and you get this discount on all your expenses because you get to keep all that GST, HST. So if you think of a scenario where you're building a studio in your home, that's a lot of money going out. Look at all the GST, HST that could all come back to you if you're registered.
Yeah, for sure. Things are lighting up in the chat, which is fun because we're going to have lots of questions to go back to. And I just wanted to sort of tell everyone, we're going to circle back to your questions, even though they're kind of relevant to the topics that we're talking about right now. Do not worry. We're going to circle back to all the questions.
Yeah,
Sondra,
that's a great question.
Yeah.
So we will definitely circle back.
Is there a reason that somebody shouldn't? So like, let's take, for example, a situation that is quite common where somebody might have what would call regular employment. So they have an employer, they work for somebody, they have a regular job, and they're doing voiceover as their side hustle in the hopes of growing that business, and perhaps that they, maybe they move to that in retirement or they're moving away from that job, whatever. Is there any reason not to register for GST, HST right out the gates or for sales tax and stuff like that?
The only reason in this scenario would be if it's just overwhelming and somebody does not want to deal with collecting and holding that money and then having an HST return to file.
Right.
So that's really, and it's easy for me to say, I think that's a mistake and you should register, because that can be very overwhelming. And if you don't have a good system in place, and you don't set that HST aside, it's trust money and CRA can get aggressive about it. And it's another area that could get audited. So sometimes people will wait. But it's really just that, because it will mean more money in your pocket if you register, but you need to know the rules. You need to do it properly. You cannot, you should not fall behind, because you don't want to go through an HST audit. But if you did, you want everything in line. So that would be the only thing I can think of.
Right. Okay. Let's talk expenses, because one of the things you mentioned earlier, we were talking about RRSPs and stuff like that. So help people understand, what is a deductible expense? And I really want to know, you mentioned this dollar for dollar thing, and I think this is one of the like sort of esoteric enigma things, how we think, well, if I buy something that's worth, $50, I'm going to save $50 on my income. And my understanding is that that's not quite the case, because it depends on what it is. But you did say RSP is dollar for dollar. So if you put $5,000,
TikTok math.
Is it TikTok math?
I feel like that's TikTok.
It's a dollar for dollar deduction.
Deduction.
So it's not a dollar for dollar reduction in your taxes.
Okay. No.
Deduction
It's
versus
a
reduction.
deduction from your taxable income.
Correct. So you have
Okay.
to multiply it by the tax rate, and then you see your savings.
Okay. So in other words, if you, let's say, earned, I don't know, $50,000, and you deposit $5,000 into an RRSP, that makes $45,000 of taxable income, correct?
Yep.
Yay, TikTok math.
Exactly. So you have, but you're right that it is. It's incorrect to think, it's okay to spend this because it's a business expense, and so it's a reduction, and I'll save the equivalent in taxes. That is not correct.
Right.
So the way that we just defined it is the correct way. And a deductible expense and an RSP deduction is similar in that they're both dollar for dollar deductions off of your income.
Right.
But they are completely different things.
Okay, so talk more about deductible expenses, please.
Okay. So on your sole proprietor self-employed statement as a sole proprietor on your personal tax return, you report all of your income and you report all of your expenses that you can think of, which we're going to define, and then you're taxed on the difference. Okay? So ideally, we're grabbing everything we possibly can. So when you're spending money to earn or try to earn income within the Income Tax Act, we want to grab that expense. So there's lots of things that are deductible to a voiceover artist. So your equipment is deductible to you. There is a difference between capitalizing equipment and writing it off at 100%. So it depends on what the tax law is that year, depends on how much money you're spending. But that rule exists because if you spent $10,000 on a new computer setup, the idea is you're not doing that every year. That $10,000 is going to help you earn income over multiple years. And so you get to take the expense over multiple years. Okay, so there's that. Any dues and fees, subscriptions, streaming services. So your Netflix, your Hulu, all that stuff, you're listening to those voices, you're paying attention, you're learning from it. That's all research.
And so is it full? Sort of like to barge in on there, but you're going to deduct those full, because aren't you using it for entertainment and for your family and things like that too?
If you're using it, if it's mixed use, then you want to back out a personal percentage. So phone and internet, for example.
Yeah.
I think it would be very difficult to get away with saying 100% of my phone is business, but a big chunk of it is. So you back out a personal percentage. Home office, including your home studio, would be deductible. So if you're renting, it's a portion of your rent, renter's insurance, any of the utilities you're out of pocket. If you own, it's a portion of your mortgage interest, property tax, utilities, maintenance fees, that type of thing. And it's proportionate to your office space and studio space versus the rest of the home. All of your gear, if you are doing any type of acting that is in front of a camera or on stage, that opens you up to hair, wardrobe, makeup. That also includes if you're going to a red carpet event and you're going to be on camera. Yeah, and if you got to get your hair done for that event or buy a gown for that event, nails, those things become deductible. If you're not doing that thing and you are behind the mic, those things are not deductible to you. Commissions, management fees, agent fees, deductible. If you have business insurance or insurance on your equipment, deductible. Meals and entertainment. So this one is actually 50% deductible. So if you took someone out for a meal, a coffee, a drink, hey, I need some advice, or let's work together, whatever the case may be, and you're paying for at least 2 people, you plus one other person, you have a deductible expense there. CRA says that needs to be deductible at 50% because the other person is actually 100% deductible and you're not deductible at all because you have to eat anyways. And because they're assuming there's only 2 of you every time, it's 50% flat. That's across the board. Now that is different than catering. If you're in a scenario where you have brought in people to come record with you for a specific job and it was up to you to provide food for them, that's different. That is 100% deductible. So you have that. Travel, hotel, Airbnb, Uber, parking, that's all deductible. Vehicle expenses, but that's another mixed use one where if you have one vehicle and you're using it for work and personal, you have to figure out how much of that was business.
Track your kilometers.
Yeah,
That's exactly it.
Track your kilometers.
That's right. Because that kilometer tracking tells you of the 10 times I filled up with gas in the last, few months, these are the number of kilometers that I drove for work, and that's how we figure it out.
I'm thinking like half the room right now just went, kilometers? What? Kilometers? Miles? And by all means, folks, if you are listening to us from outside of Canada, if you're in the States or another, feel free to drop information and questions in the chat regarding how things are at home. Like if there's something in the US, but I see some comments and stuff in there, we'd love to know. And I'm sure the community would love to get some information there. Of course, always get it checked by a professional and things like that when it comes to filing your taxes and doing accounting. But do say some stuff in the chat there. But
I would like to see that too.
So many expenses that we could deduct. Yay!
Yeah, and also any training that you do, courses, classes, invention, that's all deductible as well. And it's important to have some type of system. I know we haven't talked about bookkeeping, if that's a topic we want to talk about, but having some type of system to capture all of this. How are you supposed to pull all of these expenses from all the different places? And what would CRA even need to see? Those would be the natural next questions I would typically get. Right. But I do recommend if you have a really busy business and it's hard to keep track of it amongst your personal expenses, to have a separate bank account, separate credit card, and know that when you do your bookkeeping, that is business. It just helps, quarterly, monthly, annually when you're doing your bookkeeping to figure out what's what. But that's not good enough for CRA if they ask for support. Your credit card statement, your bank statement is not what CRA would want. It's the itemized receipt that you have to keep.
Right.
Just perfect. So that's really important.
But really, I mean, to your point, one of the things that I absolutely love, I couldn't live without, is I get an annual statement. Like I can print off a PDF of my annual credit card statement that shows me broken down by category, what all the expenses were, when they were. And it also has a little box that underneath the category, it says business ? And so you can go through the whole thing and check off what was a business expense and what was not. And it helps me just to keep track to make sure that, okay, if I need to go and find the invoice for this because I didn't enter it, I know when it was purchased and through what reseller and things like that. So
Yep. And if that's, I would review how they're categorizing things, but if overall they've got it, that's great.
Yeah, sometimes it's a little off. I agree.
Yeah. I will mention the vehicle log we talked about. For meals and entertainment, it's a popular category. And so CRA is a bit strict on this one. So not only would they want the itemized receipt, they want to know who you met with, what the topic was, and that person's contact information.
Yep.
So it's a lot. I find it a bit intrusive. But as you incur those expenses, have some type of system in place to document that. Because if you are audited, which could happen just as an expense or as an HST expense, and you have that ready, then it's a much smoother audit than not providing it or having to figure out who did I meet with.
I started taking photographs of receipts, especially at conferences and stuff, that if I'm so I'm at a conference with you, Sondra, and we sit down and have lunch, the conference already is a business expense, but then you and I are having, so I would write down on the receipt met with my accountant, Sondra, talked about taxes or blah, 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 and I take a picture and I keep a separate album in my phone of all of the receipts so that they're there.
Yeah.
So because half the time because it's usually heat printed. So over a year, that can disappear. You can't read it anymore.
Yeah. And I also get this question a lot too. Do I have to keep the paper? If I am submitting a response to an audit on behalf of a client, I'm doing it electronically. There's no paper. Right. And I have an app on my phone that's a scanner in addition to actual scanners, and I scan it and I categorize it. I personally use QuickBooks Online for bookkeeping, and I attach the receipts right to the transactions so that if I needed to go and see the support, or if I was going through an audit and they would typically want, the top 10 invoices in this category, I can sort and they're right there.
It's very, very cool. So that's how because I was going to ask, how do you keep receipts as a support? So scan them, use QuickBooks or whatever bookkeeping service you're using?
Yeah, it depends on the level of activity. If you're starting out and you're spending money, we're putting money into our business, but you have that day job and this is on the side, and you don't have a separate bank account, when you're doing your bookkeeping, you could go based on actual receipts, whether you've scanned them, taken pictures, or physically have them, although they do fade. That was a very good point. And you could categorize them, total them up, and you know what your expenses were for the year. That's the very simple, basic way of doing bookkeeping. You could have an Excel document to categorize everything, and then have folders in your phone. As long as there's a backup, that's perfect. Or you could have a program there's one called Expensify, which helps you keep track of your expenses, and a kilometer tracker. Or there's a few programs out there that are not full bookkeeping, but they help you categorize your expenses. And then you have QuickBooks Online, where you can invoice right from QuickBooks Online. I know there's complications if you're invoicing cross-border, collecting income cross-border, which we've been through.
Not a fan.
I know. And you can attach your receipts right to the transaction right in that type of program. And that's in the clouds, right? That's always backed up. So coming up with a process that makes sense for you is, there's lots of options out there.
Yeah.
Okay. I think that's information that definitely crosses borders when it comes to keeping track of expenses, basic bookkeeping. Don't just put them in a box or a bag and then look at them when you file your taxes. Have a system that you're going through stuff and saving it and categorizing it and things like that.
Yeah.
You mentioned a few times the word audit, and I'm sure that's something that makes everybody go, kind of shudder. But what are some of the red flags for the CRA or for tax? I suppose in the States, the IRS would be similar things.
Yeah.
What are some things that make them go, and want to take a look at you?
Yeah. There's a few things that can trigger an audit, and you can also get audited at random. So CRA has different programs and different departments that do different things. So on a personal tax return, they have something called the matching program, where they match up what was filed with the slips that they have on file. So if you have that T4A or T4 that came in that's linked to your SIN number, the CRA also has a copy of it. So if you don't have it on your tax return, they're going to match it up. So there's that. So making sure that you have everything that CRA has is important. If you are filing late, that can trigger an audit. If you're filing multiple years at once, that likely will trigger an audit. Right. If you are filing a loss more than 2 years in a row, it can trigger an audit. And that's because CRA wants to know that this is not a hobby, that you have an expectation of profit, that you have training in this area, and that you're not just writing off personal expenses. So once you've passed the second year of a loss, they may ask questions. And that's because that loss, if you're in a loss position and completely valid, goes against that day job we were talking about, and actually it lowers your income, can trigger a refund. And CRA's job is not to pay you money back. They don't want to do that. So they may question and make sure that it is legit. So those are the ways. There are categories that are picked on more often than not. So
Right.
vehicle expenses, for example, they love to audit vehicle expenses. They love to audit professional fees, trying to find somebody writing off, a legal fee paid to their divorce lawyer as a business expense, for example.
No.
Right. So, there's specific areas. And when you're working with, a professional accountant who knows the industry and sees these trends, it's our job to say, hey, hold on a second. You made $20,000 this year, gross, but you're writing off, $15,000 as meals entertainment. Let's just check in. Do you have the support? Does that make sense for your business? And it could. I don't know what's in there. But if you do have the support, then maybe we go for it. Or if we want to avoid an audit altogether, maybe we lower that a bit.
Somebody likes steak and expensive wine.
But I mean, I've seen so many scenarios where you first look at it and you go, hold on a second. That's a lot of money to spend on courses and training. I want to make sure you have the support if you didn't have the income.
Right.
And it can become 100% valid, but it's just a red flag. So we just want to make sure, sorry, go ahead.
No, please go ahead.
I was just going to say with HST, they like to audit HST and they're sensitive about it. So if you're not paying the HST balance, they start to ask questions because it's trust money, like I mentioned before. So you should have that ready to go and ready to pay as soon as you filed, as soon as it's due. That's their perspective. With income tax that's owed, so when you file your tax return, they're a bit more lenient on making payment plans and things like that. But HST, they can get very aggressive about. So those are popular audits.
Just a follow-up question on this, because we've said the word so many times just before Emma goes to something else here. The word audit, I mean, that can have what can that entail? Is that simply sometimes an email from them that says, can you please provide copies of A, B, and C? Or is it like a full-fledged process?
It could be anything. We file our tax returns online. It really is a trust system, the honesty system. If I said I, had $20,000 of income, unless they checked my bank statements, then they have to go with it. And so you want to make sure if you're going to get audited, that they're not going to find that you haven't reported income or you've overstated your expenses, right? An audit, like that matching program I mentioned, it's in Canada, it's never an email. CRA doesn't email or very rarely email, so that would be fraud. But they may send you a letter or your representative a letter saying, hey, you missed this slip. We don't see it, which it's possible it wasn't missed. Speak to your accountant. Or prove those donation receipts. And then you send in the donation receipts and that's it. Prove your medical. You send it in, that's it. Prove your property tax. These are common throughout the summer. We go through these.
Right.
And then you have a business statement audit where they say, we want to see support for, we need a listing of all of your expenses, date, vendor, total. We want to see the top 10 invoices, or for HST, the top 10 HST paid. They can pick at random. They want full lists. And then, there's something even further. If your tax return looks unreasonable to them, it's not unreasonable to us if it made sense, but to them, if they say you didn't make much money, how did you pay your property taxes that are listed at X amount? And you have, 2 kids and you had childcare, and how did you afford all of this? And there could be an answer. There could be savings. There could be an inheritance. There could be something, right?
Yeah.
But if it looks like it's unreasonable, you could go through what's called a lifestyle audit, where they say, how did you afford all of that? And, then you have to provide, the answer.
Interesting.
But they're not very common, though.
Right. Okay. Emma, go ahead.
Okay. So with sole proprietor, incorporated, all of the things, for people who are incorporated, how do you take money out of the corporation?
Yeah, that's a good question. So you can pay yourself in terms of actually transferring yourself money any way that you would transfer yourself money. You can send yourself an e-transfer, do a direct transfer, write yourself a check. But how it's accounted for is what you're asking.
Yeah.
So there's 3 different ways to take money out of the company. So keeping in mind here that when we mention the 3 different ways to operate, that corporation is a separate legal entity. So anytime money leaves, we have to record it somehow. If you're taking it out as the shareholder, it's going to go on your personal tax return if it is dividends or payroll. So if the company owes you money, let's say you're starting up and you put $5,000 into the company to pay some expenses that are coming out, and the company now has profit and can pay you back the $5,000, that's a loan. That is not an income. That's not income to you personally. That's a loan. Dividends and payroll are the other options. So payroll is the same way you would go on payroll for any other company. This just happens to be your own. So in Canada, there's no EI in this scenario because you can't fire yourself and go on EI. There is CPP.
People have tried.
I bet. I bet.
After that, so there's no EI, but your corporation, which is you, is responsible for withholding the taxes and CPP, matching the CPP, and remitting that to the government, and then paying you, its employee, your net paycheck. So on the corporation side, you have income and expenses, and in there includes wages and benefits. There you are on payroll. Then you have your net income. In this scenario, you would get a T4, and you would pick that income up on your personal return. If payroll was done quite evenly throughout the year and correctly, you shouldn't owe anything. You shouldn't get a refund. You were 100% a deduction in the company, but your taxes were withheld and remitted as you took the money out. Pay as you play, I like to call it. As you take the money out, you pay. Dividends are different because they are tax-paid profits leaving the company and being paid to the shareholder. So again, back to that income statement on the corporation, you have income and expenses. Then you have your net income, you pay taxes. Whatever's left over after taxes is called retained earnings, which is literally the earnings that have been retained in the company. The whole purpose of a for-profit corporation is to make money for the shareholders. So then you, as the shareholder, can take the money out as a dividend. You pick that up on your personal tax return in Canada as a T5. And you get credit for the fact that the company has already paid some taxes on this amount. You get a dividend tax credit because it's not an expense in the company. So if you're the only thing on your personal tax return was a $35,000 dividend from your own company, the dividend tax credit is enough to cover off your taxes. Okay? But if you said, yeah, right, I wish I only needed $35,000 out of the company, I need $85,000 out of the company.
That sounds more like it.
Okay.
I live in Toronto, so
yeah. Now, there could be other contributing factors, but who can live off of that? I agree. So let's say $85,000 you need and you wanted to do dividends. That includes any taxes that you're going to owe. So in Ontario, you would owe $9,637 on that $85,000 dividend. And it ranges. In Quebec, it's $15,000.
Dang.
Yeah.
That's not TikTok math.
No, I plugged it in here to do the calculation. But in that $85,000, you've taken out what you will owe. And so you get the dividend tax credit, but you're in a higher tax bracket than that 12.5%. And so you owe the difference. So this is not pay as you play because you may owe something.
Right.
You can do a combination too. It doesn't have to be one or the other.
This incorporation stuff can be a little dizzying. I think it's probably good to have an accountant involved. So I don't think this is something that an individual can, realistically handle well while also taking care of their own business. Is that a fair thing?
I mean, I definitely think if you're incorporated, you need a professional accountant and ideally an industry-specific accountant who understands what to look for. And if you're self-employed, I also recommend an accountant that is industry-specific. As soon as you're self-employed, your personal tax return becomes more complicated. I'm not saying you can't do it, but there's definite value there.
I want I'll be honest, with the whole incorporation stuff, it's something that's very attractive to many of us, and we what maybe aspire to that. It's like, yeah, at one point I'm going to be making enough money and it's going to make sense to incorporate, and we'll cross that bridge when we get to it. Let's bring things back down to some basics, and we talked about it a few times, and that's just basic bookkeeping. And maybe you could share with our audience, 3 good best practices to have when it comes to bookkeeping that they can use throughout the year?
Okay. The first one would be to separate out your business from personal.
Okay.
Right? So if you're a corporation, your company has to have its own bank accounts. But as a sole proprietor, having a separate bank account that is strictly for your business is something I would recommend, because then it's not confusing. It's not mixed amongst your personal income and expenses, or your personal deposits, I should say, and expenses. It's very clear that whatever you put on that business card is business, and that really helps. Another thing, when you're doing your bookkeeping, if you are doing your bookkeeping or you have a bookkeeper, to make sure that the categories include different provinces or outside of Canada, because they are treated differently. Also, to make sure that your GST, HST is separated if you're registered. So often I'll get a client who says, my bookkeeping is done. Here are my totals. Here is everything. But I have income that includes income from all over Canada and the US. But that doesn't help me determine what the HST collected was. And expenses, same thing. If you have travel all in one category and you haven't separated between Canada and the US, we have to go back and look and see what was Canadian, what was outside of Canada, to make sure we're getting that correctly.
Right.
And I did mention, depending on your business activity, depends on how big you have to go with a bookkeeping program. If you're okay with Excel can do it. That can be it. As long as you have your categories correct, and you're separating out sales tax when applicable, that's important. I do sometimes have conversations with clients that's like, oh, wait a second, that shouldn't be in office supplies. That should be in production costs. That is not a big deal because it's a deduction. Right. Things that should be separated would be, meals and entertainment, because that's something that is deducted at 50%. So you don't want to put catering in your meals and entertainment, because you'd be losing half of the deduction. Also, I should mention golf green fees are not a deductible expense. That CRA doesn't.
Well, there goes my plan to start golfing this year.
There it is, eh?
They don't like that. And also no single meals. So if you're going to a meeting or going to do a recording, you can't buy yourself a drink or a meal and call it a deduction unless you're away from your home for more than 12 hours.
Okay, good to know though. 12 hours.
Yeah.
Yep.
Okay.
This is why I have a bookkeeper.
Folks, if you joined us partway through this evening's show, this is the Voiceover Round Table here on Clubhouse Live every Tuesday evening at 7:30 p.m. Eastern, 4:30 Pacific. We talk about all things voiceover with a special focus on community, bringing you in-depth interviews, roundtable discussions, special performance events, and industry-leading guests.
And tonight, our special guest is Sondra Gold. I'm scrolling down. I'm I know I'm supposed to say something.
We talk taxes and money.
We're talking taxes. Now, I know you are Canada specific, but can we hit a little bit of just general cross-border, very vague general?
Yeah.
I think, yeah.
Sure.
Yeah.
Sure. Yeah. So I'm a Canadian CPA. If I have a client who needs a U.S. tax filing or is going to physically work in the U.S., I refer out to a U.S. accountant. But the basics of the conversations I have initially are, first you have to determine if you are actually working in the U.S. If you go into the U.S. to have a meeting, that's not necessarily working in the U.S. If you go into the U.S. to record something and deliver something, now you're working in the U.S. So you got to make sure legally you're allowed to do that. Your visa is in place, which can be a lengthy and costly process.
Yeah, talk to me about it.
The fees related are deductible.
Thank God.
and because they're so large, I recently went through an audit, and everything was accepted, which just reconfirms that yes, of course, that is deductible. But you want to make sure that if you have a filing requirement in the U.S., that you're doing that. So the physically going into the U.S., working in the U.S., filing requirement, and your visas are all things to consider. However, your visa is not dependent on a filing requirement. So I'm putting that out there because I think that's misunderstood a lot.
Mm-hmm.
If you do have a filing requirement, you want to make sure you're doing that in the U.S. Unlike in Canada, in the U.S., there aren't so many audits. It's not as popular to go through all those audits that I mentioned, but they kind of act on fear. So they have these big penalties if you don't report properly and they catch you. And so that's kind of what keeps the U.S. in check rather than in Canada where we file and they check and then we adjust if necessary. And then if you're a U.S. person coming into Canada, if you are earning income in Canada, there may be a filing requirement and you may be required to file a non-resident tax return. As a Canadian, you are required to report your worldwide income. So if you do go to the U.S. and you are required to file a U.S. tax return in Canada, you still need to report that same income, but we do have a tax treaty with the U.S. So with many places around the world, but with the U.S. specifically, because that's a popular place to go, you report your worldwide income, and then you're reporting also in the U.S., and you get what's called a foreign tax credit for any taxes that were paid in the U.S. And this is supposed to avoid any double tax. So reporting in Canada, reporting that foreign tax credit, so any taxes that you paid in the U.S., and then you get the foreign tax credit, which I will add gets audited 100% of the time. So if you do have that scenario where you're filing in Canada and the U.S. and you have this foreign tax credit, you want to make sure you're using professionals, that it's done correctly. Keep all copies of all correspondence. Take pictures of if you had a U.S. refund check or you owed, you want to keep copies of all of that. Something that they would ask for is the bank statement to show that the money was deposited or the money was cleared. So all of that is very important for that type of audit.
Okay.
Yes. Questions?
Well,
Shall we go to questions?
oh yeah, we've got a ton of questions, and they're fantastic. I'm gonna scroll up. I'm scrolling up. So, okay, we're gonna go to Hannah. First question: agents. How does HST work with getting jobs through agents? Since I don't send an invoice their way.
And are they collecting on your behalf and then giving you your cut type of thing? Is that what would have happened in that scenario?
I mean, that's what, in general, my Canadian agents, that's what they do.
Yeah.
They collect tax on my behalf and charge tax on my behalf.
Yeah.
So it's like I get charged tax on the commission.
Yep. Yeah.
Yes.
So in those scenarios, and I'm often asking clients to please reach out to your agent and get a summary of the year. Because if you just deposited a check or you received an automatic deposit, that is a combination of all sorts of things. That's your fee, plus if it was in Canada, HST, less your agent's fee, less their HST. And you should be breaking all of that out on your tax return so that we see your income, and then on your HST return, your HST collected, the commission expense, and then on the HST return, the HST paid on that commission. So getting a statement from your agent really helps figure out exactly what the income was, what was the HST collected. Right. But any contract you're signing, and your agent should know your HST number if you're registered, and they should be collecting on your behalf. But I think best practice to check that over once you receive something from them.
Yeah, that's a great question. That brings to mind a question I had, because I know sometimes people get asked this. You said your agent should have your HST/business number. Does it?
Oh, I know what you're going to ask.
You do.
I know.
Who needs your SIN?
Nobody. Nobody needs your SIN.
When I was working with another company, there was a client that it was insisting that they have my SIN. They refused to accept my HST number. They refused to accept it was a company actually in Canada, and they stated that they would not pay unless they were given the SIN. And I was told by the accounting company I was with to give it to them.
Yeah, I mean, I'm assuming it's because they needed to put that on a T4A.
Now that brings me to the second part of the question, that is the business number not okay in lieu of the SIN on a T4A?
I've seen both.
Okay.
I've seen both. And it's also common to not always get a T4A.
Mm-hmm.
Right.
Right? Not all companies will issue one, even if they should. It's not something that CRA really comes after.
Yeah. But I asked the question because I think about trying to protect people, because that number, along with like your driver's license and a credit card number, are things that can put you at real jeopardy of ugly things happening.
Yeah.
That's not to put, to cast doubt on agents or production houses or anything who are, just trying to do their bookkeeping the way that their people have told them to do it. But I just like protect that SIN.
Yeah. I'm trying to think if you would get an error if you don't add the SIN to a T4A.
Because this company was they were like heels in, refused point blank, and finally one of the accountants I was dealing with, they're like, just give it to it's.
Yeah, you might have to for a T4A. No, you don't have to. Sorry. You can put zeros or a business number. Now another reason why they might be asking for it, like just like an employer, because if they're paying a non-resident, they're required to withhold taxes. Right, so maybe by having that SIN, they're able to validate that you're a resident and they don't have that requirement to withhold. I'm not sure.
I don't know. Interesting.
I want to we'll go, I think Hannah has a second question that Emma, I'll let you handle, but I wanted to sort of paraphrase Teresa's question here, because Teresa's asking about expenses that maybe we didn't claim, that we perhaps forgot about or something. Is it possible to claim them in previous expenses from a previous year in a new filing?
Technically, you should be doing a T1 adjustment to the year where the expenses were missed. However, that's a lovely way to get audited. CRA is not excited about you increasing your expenses. They'd love for you to increase your income. They're not going to audit that. So I would say if I had a client that came to me and said, oops, I missed all these expenses, I would see how much they are. If I include them, is that going to trigger something? Because technically it's incorrect, but what are we talking about? Is it really a big deal? Is it something we need to be worried that CRA is going to say no? Because even if you did get audited and CRA said they shouldn't be, then do the adjustment. That means they're already, they've already seen it. So if it's something small enough, I would just include it.
Yeah. So you can be in the right and go ahead and do it, but is it worth your while?
Right. Exactly. Right. There's a cost benefit to everything.
That's a great question, because sometimes you're like, oh, look at that invoice.
Yeah.
Yeah. True.
Yeah.
Hannah's second question is, we spend winters abroad, but I continue to work from there, both in Pillow Forts and local studios. Are my flights deductible?
But you're not flying out for work. You're just changing your working location. Like if you were required to fly out to LA for a meeting, that is deductible for work. If you decided to spend the winter in Florida, because it's warmer there and you really have there's no reason to technically be there that is business related, then that flight would not be deductible. And I'll also add in that you can only have one home office at a time. So if you have that scenario where you fly down to Florida and you've set up your studio there, those studio expenses are deductible, but we can't be writing off a portion of the rent or mortgage and all that stuff in multiple places at the same time.
Good to know.
It would almost be good to have a lawyer on here too, because I have a feeling that these questions about working abroad too, you would want to get legal advice on that. No? Or is it maybe it's okay to work remotely? I know
yeah. No, you can definitely work remotely. Definitely nowadays it's common. Lots of people are doing that. But if you flew down for a meeting, that's different than I'm flying down by choice to work from, another location. And on that same note, if you flew down to Florida and a job came up and you had to, rent a studio to record something in, that would be deductible.
Right.
Mm-hmm.
Even though you have a studio at home, but you're not home. So that would be deductible.
But you also, from a legal perspective, you fall into sticky territory there, because if you don't have a visa while you're standing on U.S. soil and you're earning money, you can get in a lot of trouble.
Yeah, yes, there's definitely a legal aspect there, because it can be very confusing. Because you think about like influencers, they're traveling all over the world.
Yeah.
They're not filing 50 tax returns.
Yeah,
right.
They have to have a home somewhere. It's true. And if you were down in the States and you recorded something and you delivered it in the States, are you considered working in the U.S.? That's a good question.
Yeah. I think it gets very sticky. I think it's auditioning is one thing, but actually booking, recording, and delivering the job is different.
Yeah. Yeah.
Mm-hmm. Other questions?
Going to Europe and having an EU passport not there for long enough to be taxed. That's just a comment. I think Kat's saying that she uses a CRM to keep track of a lot of stuff. You can make notes for clients or about projects, and you can go back to all of it. That she's Canadian, but she lived and worked in the U.S. So, I think that's it right now for the questions. If there's any more questions, please do post them in the chat. Paul at one point did have his hand up. I apologize, we didn't get to that. If you do still have a question, Paul, you are welcome to come up and ask it. I think there's a lot of stuff that crosses over between taxes and law.
Yeah.
I've done panels with, even at VO North, we did it with Lainey.
Yeah.
Because it is definitely important to figure out the legal aspect and the U.S. tax aspect.
Mm-hmm. Yeah, absolutely, because it can be, well, I mean, we're going to go through that with my tax return this year with my...
Oh, you got messy, eh? You went and got messy.
So I submitted all of my paperwork. Submitted all of the paperwork, and it's like I made sure that my accountant and my lawyer know each other.
Yeah. No matter how complicated, if you're on top of it throughout the year, it just makes such a smoother tax season for you and your accountant.
Oh, I wanted to ask. So say you've been doing your own bookkeeping, you've been doing your own accounting, and you are perfectly content with what you're doing, but you come up against oh crap, I don't know the answer to this question. Can people contact you?
Yeah. Yes, I do offer consulting. I do have an hourly rate that I offer. So if someone said, okay, I hear everything you're saying, my scenario, I have a few factors that I need to discuss, I'm available. I am available to do personals, corporates, partnerships, and consulting. I think it's really important to have someone who understands the business, because even that little bit that we mentioned about the agent collecting on your behalf and then your deposit being a sum of all sorts of different things. If there's somebody who doesn't understand how that works, then it's less efficient. But
yeah, the branded, and I'm not going to name brands because we're voice actors and we want to be able to work for people. But the branded box at the corner office who will do your tax preparations might not know those things, right?
Yeah, and that, who I believe you're referring to, I see a lot of mistakes that they make. If somebody came to me and they were not self-employed, they were employed, and there was no self-employed in their world, I don't have much value for them in terms of a business because they're not running their own business.
Right.
But anyone who's self-employed, it's the topic that is avoided because I think that there's just lack of courses and lack of opportunities like this one for people to chime in and learn something about running the actual business as opposed to the art of being a voiceover artist.
Right.
It's really important to pay attention to, what I call the business behind the show. Because
It really is.
Yeah, and once you feel in control of that, you feel like you understand it. It really lowers the fears and anxieties around taxes and money and having those conversations. So on top of having consulting on whatever somebody wanted to discuss, every new client that I onboard, I have a new client consulting meeting with where I go over lots of the topics we spoke about today that are specific to them. And I also do what I call a 360 financial health check. So we talk about tax-free savings accounts, RSPs, different types of insurance, wills, setting up your accounts, your My Account or My Business account with CRA. I don't sell any of that stuff, but we talk about how it can affect your taxes, or just even bringing up, hey, have you considered a will can be just a really big piece of the puzzle, or one push to finally have that will in place.
Right. I've got a question for you, because something we alluded to a little bit earlier is sometimes some of us are artists of multiple hats. Maybe we, like for me, for example, I do voiceover, but I also MC events and things like that. Yeah. Or, some of people are on-camera actors. At what point should people be dividing up categories within, let's say they're a sole proprietor. I know that there's ways to say, well, this portion of my business is X and this portion of my business is Y. At what point should people consider doing that, or should they try and make an umbrella, what ABC media production company, blah, blah, blah?
Yeah. From a tax perspective, you don't really have to. Everything can be combined into one business statement. It's you and your services and your talents.
Right.
From an HST perspective, you have to combine that gross income to see if you've hit that $30,000 threshold. From a branding perspective, you may want to. Maybe your MC hosting business includes you having subcontractors and they hire your company. It's not necessarily just you, and something to potentially sell in the future or have a partner. So if from a branding perspective, you may want to do that. And you can do that by having a master business license. So you can own a name that's not your name, even without a corporation, that allows you to operate under a business name that is something else.
Right.
But from a tax perspective, you can combine everything, or you can have separate business statements. But then the questions are, well, what do I do with my cell phone? That's all my businesses. What about my home office? That's all my business.
Dividing it up like one third.
Right. And you can. And from a bookkeeping perspective, if you have multiple businesses, it could be very important. If you're looking at your books from as a manager and you want to see, okay, how is my hosting job going? How is that sole proprietor hosting role going? Am I making money there? Is voiceover really where I'm making most money? How is voiceover going for me? Is this not, is it not as profitable? Where should I concentrate? So from that perspective, that could be very important too.
But in a nutshell, if it's self-employment income, it's all going into the same thing from a tax perspective, is what you're saying.
Yeah. If you had, self-employed, like everything you've described, and you also had a taxi business, maybe there's separations there, because a taxi actually would have to be registered for HST. But, maybe something there. Or if you're also a musician and you're teaching music, that might want to be separated because you have different rules, again, with HST. If you have a rental property that does short-term rentals, like an Airbnb, that's a separate rental business statement, but that is considered a small business. And so you have to combine the income when you're thinking about HST. And that's Airbnb short-term, that's not long-term rentals.
Right. What is a website that people can get in touch with you, Sondra?
Yeah, it's just I think it's sondra.ca even. Did I buy that one? Did you? Never mind, I just gotta go. SondraGoldCPA.com. That's my main one, but even if you Google me, I should come up. Yeah, SondraGoldCPA.com.
We'll put that at the top of the room.
Perfect.
Work.
I have a question.
Yeah.
What are some of the biggest mistakes that you see people making?
Yeah. Okay. So
that's broad, but like when they first come to you and say, "Hey, I would like to, avail of your services," and you start looking at their books and you're like, "Oh, sweet baby Jesus, what is happening here?"
Yeah. Not separating out different businesses. Like if you have personal and business all mixed together, or if you have rental, whether it's short-term or long-term, mixed in with your business, I think they go on different places on your tax return. So it's very difficult to look at that and then make any recommendations. So mixing those things in. It's same thing with if you're incorporated, putting personal expenses through the company. If it's a big mistake, immediately we say, okay, hold on, make sure your separate accounts are set up. You're editing as you pay. So if that was business, put it on your business card. If that was personal, put it on your personal card. Again, with the corporation, people not going on payroll when maybe they should have, because when you take money out, like I said, as a dividend, that gets added to your personal taxes, and then you owe taxes. So if you owe $10,000 of taxes, how are you going to pay that? If the answer is take the money out of your corporation, you've created a circle. So I think that ends up being a mistake. Not filing for multiple years, it's easy for me to say that that's a mistake because I think it triggers an audit, but I think you don't put it off. The sooner the better. Get it done. Don't file late. Not registering for HST. In most scenarios, I think it's a mistake, because if you can manage the cash flow aspect of it, it's more money in your pocket. That's a good thing. Not getting an industry-specific accountant. I think that's really important. And I often will have a client come to me who says that my accountant just doesn't understand my business. They don't understand how Netflix is a write-off for me, or they don't understand that I'm like what I'm doing. And how can an accountant make a judgment call about what's reasonable, unreasonable? Where's your commission expense? I expect to see that. Those type of ask the right questions if they don't understand the business. It's the first thing we need to do as an accountant is understand the business. And I think you get that from an industry-specific accountant. The same way that I, wouldn't take on a client that I had no familiarity with, that you should also go to an accountant who understands your business. I think it's a mistake to not claim expenses if you don't have all of the support you should have. I still think you can claim something. So I think people go, oh, I didn't know until now I had to keep my receipts. I'm not going to claim any expenses. I think that's a mistake. If you went through an audit, most of the times, depending on the auditor, they understand that it would be reasonable to say you did have some expenses. And also, you can get copies of receipts. You can get a commission statement from your agent. A lot of your travel will be in your emails. You can get duplicates of your phone bills. So there is a lot of receipts that you can recover. So I think it's a mistake to say, forget it, I'm not claiming anything. And I think it's a mistake to not have a system in place for bookkeeping.
Really, really valuable stuff. We've got Paul up on the stage. He had a question earlier. Thank you for joining us, Paul.
Hey, Paul.
Oh, thank you for having me. A fascinating conversation. I'm really glad I was able to join in.
Thank you.
Yeah.
How can we help?
Well, I've been using Quicken for forever for my personal finances, and you mentioned QuickBooks, and that ties in very nicely to something I've been debating, which is how soon I should move over to QuickBooks and whether I should at all, or if there's some other competing solution for tracking both personal and business finances, side by side or but separately, that I should be looking at.
I think that they should be tracked separately. And that goes back to having a separate bank account, separate accounts that are tracked, because if you mix in your personal amongst your business, there could be some confusion in terms of what do we pull out for the business versus what is personal. You still need some personal because you need to know your home costs, for example, which are mostly personal. And we need to know medical expenses for, the medical expense credit, nothing to do with the business. But I do think they need to be tracked separately. There are lots of different apps and programs out there. I'm a big fan of QuickBooks Online because that's the one that I use. I love that I can attach my receipts right there. It links up to my bank account, so my business bank account and my business credit card. It pulls in the transactions right away. I categorize them, and I also invoice right from that program. So that one works for me. There's also Wave and Zoho Books. Those are good ones also, especially for self-employed. QuickBooks Online is a great program. But if you're incorporated, 100% QuickBooks Online. If you're self-employed, there are some other options out there that keep track of that income and expense, all those categories. There's also Everlance. I don't know if I mentioned that one. That's expense tracking and mileage. So with that vehicle log, if you're driving a lot for work purposes, business driving, that program is really good. I'm not familiar personally with Quicken, but it has to be a program that is working for you. And a lot of it also depends on how you set it up. If you set up a QuickBooks Online as if you're a corporation, that's very different than if you set it up as if you're self-employed.
Got it. Okay. So yeah, I guess I was going to ask you if being in Quicken gives you an advantage, does that give QuickBooks an advantage, a built-in advantage? But it doesn't sound like Quicken is sort of your thing.
It's just, yeah, sorry, it's not my, I don't know the program very well.
Okay. Thank you so much.
Thank you, Paul.
Thanks, Paul.
We have another question in the chat from Sierra. I was late for this. Sorry if it's already been answered. Is there anything specific we need to add to our invoices to clients that makes them CRA compliant?
That's a good question.
Very good question. From an HST perspective, yes. You have to have your HST number on that invoice. You have to have the percentage that you're charging on that invoice. And it has to show you, add X percent, and here's my business number. It can be anywhere on the invoice. It can be at the bottom. It can be at the top. The addresses should be there, date, the description of what was done or the time of that work should be there. That's what CRA would look for. And as if you are paying for an invoice, it is actually your responsibility, if you're paying HST, to validate that that's a registered active HST number to claim it. And there's a way on CRA's website to check to make sure. I don't know that in this industry that's a really big deal, but I know I have a few construction clients and they often, come back saying, like, we check every single one because they may have a subcontractor who adds this 13% and claims they're an HST number and they're not actually registered.
Yes.
Seriously.
Yeah, because then if you go through an audit, CRA makes sure, and if you've claimed HST that was paid to someone who was not registered, it's denied. So it's on the payer to do. But that's a great question. Yeah, great question.
Thank you for that.
Very insightful.
Yeah, this has been
I had one more question.
What?
Oh, I'm sure we have tons more questions, but we gotta kind of wrap it up soon. I heard you mention a couple of times. My ears kind of perked up. This commission expense. Can you explain a little bit more how that's treated, how that should be handled?
When I'm saying commission expense, I mean to a manager or an agent. So whatever the fee is that's going to them, whatever percentage you're paying is an expense on your income statement. There's also, commission or thank yous. If somebody's got you a job or referred you some work and you send them a thank you or type of commission, that's expensible to you. And I didn't even talk about gifts and advertising and promotion. If you wrapped a job and you sent a gift to someone or something like that.
Sure. But from the point of view of, let's say, what is one of probably the most common scenarios for many of us, or something that people aspire to, is to have an agent. So let's say you book $1,000 job with an agent and they take 20% commission. How is that handled when you do your taxes, I guess is what I'm asking.
Yeah, so the $1,000 is your income. And if it's 20%, the $200 is an expense. And if that was all of the activity, you'd be taxed on the difference of $800.
Right. And is there a difference between doing that and just saying you had $800 income?
Yes, you should be reporting gross. That's the gross versus net. So if at the end of the day, it is really an agent relationship where if you didn't do the work, nobody would have gotten paid. That income, that gross income belongs to you. So that's important when calculating, the 30,000 threshold for HST. That's important from your perspective to be able to see how you've grown and to see how much in commission expense you have every year. It's also a good thing to do in terms of best practices to make sure that your agent is giving you all of the income they're supposed to give you and your expense is what it's supposed to be. But yes, it's a gross versus net. So as long as you are responsible in the end for delivering that work or nobody gets paid, you should be reporting gross.
Okay. Thank you.
Teresa is asking if we could touch quickly on gifts and advertising.
Yeah. Yeah. So advertising and promotion is a popular category, and that includes, having a website and paying for an update on a website or your website costs. Creating those voiceovers I always see on my clients' sites so you can listen to the different demos. It also includes gift baskets or bottles of wine. Let's say around the holiday times, here comes the holiday times, and you send out, so do I, where we send out a bunch of gift baskets. So I have people that refer me business, and I, send them a thank you. It's a thank you. It's a happy holidays. It's keep me in your thoughts. Let's continue to do business together. Let's continue to work together type of advertising and promotion. Technically, the Income Tax Act says that anything that is consumable, so if it's a box of chocolates or a bottle of wine, it should go into the meals and entertainment category. Because CRA is assuming you're participating in these bottles of wine and these boxes of chocolates. Depending on the scenario, I may or may not follow that rule. And I'm ready to stand up to CRA if they want to question it, which I haven't gone through, because I think it's reasonable to say that, especially around the holidays, like you're not participating in all of that. It really is a gift. But that's the advertising and promotion. If you are actually paying for advertising on certain websites or things like that, then you would have that type of expense as well.
Great question, Teresa. Thank you.
I think it's always really funny when we get into these conversations, and initially it's like it's the slow kind of burn of the questions coming in, and then all of a sudden it's like, but wait.
And there's
yeah, and I you're putting my information up there. If somebody realizes they had a question or they're listening to this after today, send me an email, say, hey, heard you, refer to this group. And, of course, I'll answer questions as long as I can, or we can have a quick call. That's no problem.
That's awesome. Thank you so much for doing that for these wonderful people.
Yes, I love this industry, and I loved during COVID to see it boom. It was wonderful. And all the home studios that appeared, and it's been such a wonderful industry and fascinating to learn about and be a part of in this way, because I can't do voice work. So this is how I'll be part of it.
Sondra, we thank you so much. It was so insightful, and it's a conversation that keeps going, right? Because rules change and your situation changes and stuff like that. So we look forward to hearing about changes in the future. And thank you thank you, Sondra. Emma, go ahead.
For having me.
What am I saying? What am I doing? You do it. I don't know what I'm doing. I was looking at the chat, making sure there wasn't any more questions.
That's okay. You can say thank you.
I could say thank you.
I think you did. I did.
No, seriously, thank you. And just, I'm completely biased on all levels with this because Sondra is my accountant and has saved me a crap ton of money over the years and has found money that other accountants have just been like, oh, we should have done it. And so I am I was one of those people, like she's basically been talking to me all night of, make sure you file your taxes and don't do your multiple years and la. Because I was one of those people that literally stuck my head in the sand for a really long time. I was like, if I just don't look at it, it'll go away. And then when you find an accountant that works with you and matches you, whether it's Sondra or somebody else, it makes such a difference in how you approach your business. Now it's, I've got a bookkeeper and I'm learning more about it. And the more I learn about it, the more comfortable I am with it. And then when it comes to tax season, I'm not having a complete panic attack. And it's like, what's going to happen? Because I've been informed the entire year as to what's going on with my accounts and what's going on with my expenses. And it just makes it so much, the stress level just reduces. Yeah.
So Emma, I'm going to ask you this question, Emma, rather than put Sondra on the spot, because a lot of people, I'm sure, are saying, can I afford to have an accountant?
You can't afford not to have an accountant. Honestly,
there it is.
you cannot afford not to have an accountant. And it's like, if you want to put all of the hats on, like if you're running a business and you want to wear all the hats, have at it. But I just don't have that time nor the patience to do it. Like I want to feed myself and go outside sometimes. So I don't want to have to do all of the things. So I outsource where I can. And as far as I'm concerned, and the numbers are concerned, having an account pays for itself.
Yeah.
Right.
Yeah.
If I ever have a client that I feel like I can't be of value, I tell them that it's like, you don't think you need me. Once in a while, it will happen. Not often, because you should come to me when you're self-employed or, more active. But, your accountant, whether it's me or somebody else, just like Emma said, should be part of the team. I know we tell my clients, I'm part of your team. It's open communication, because you know your business best. Even if I understand the business, those transactions, what the trip was about, where you were. And so that constant communication so that everybody's on the same page and there aren't any surprises is really important.
I also find it's helpful that Sondra follows me on Instagram, so she knows what I'm doing.
Don't forget to keep that receipt, Emma.
So when I'm sending all these travel expenses, she's like, I know, I saw that.
Yeah.
I saw you were there. I know you were there. We got pictures to prove it. Awesome. Sondra, again, thank you so much. And before we get into what's going on next week, Emma, that's your cue. We have a kind of cool special announcement to share. Very honored to have been invited to join Mark Guss, ACM Talent's Mark Guss, tomorrow night on his weekly LinkedIn audio event, Instincts of a Talent Agent. And that's live on LinkedIn tomorrow evening at 8:30 p.m. Eastern, 5:30 Pacific. I'm really looking forward to that. We had Mark Guss on the show. It was a lot of fun. He is such a knowledgeable man, and it's going to be fun. Looking forward to that.
Mm-hmm. So if you feel that you didn't get enough of us tonight, you get some more of us tomorrow. No,
I can't wait. And as for the Voiceover Round Table, Miss Emma, what's going on next week?
I just, sometimes you get these moments where you're like, how did I manage to pull this one? And next week is one of those perfect examples. This is the first time that next week we actually had someone not, they kind of disappeared. And I was like, you know what? I'm going to ask this person. I'm just going to take a chance and ask this person. They're never going to do it. They're never going to do it. And they said yes within 5 minutes of the email. We have Joe Cipriano joining us. The legend himself. Joe is the biggest voice in promo that has ever walked the planet since Don LaFontaine, really. And he is our guest next week.
So looking forward to that. I'm still kind of stunned.
I know.
Truly hope that you'll join us. We do the live show Tuesday evening, 7:30 p.m. Eastern, 4:30 Pacific, live here on Clubhouse. You can catch it as a podcast later on. This is the Voiceover Round Table. Good night, everyone.
Thank you so much. Good night.
Bye, everyone.